Welcome to the Fintech Times News and Views podcast, brought to you by LexisNexis Risk Solutions. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times.
Hello, and welcome to another episode of the News and Views podcast. It's usually Polly that does this part, but unfortunately she isn't here today, so I will be moderating and sort of taking lead on our podcast today. I'm joined by Claire and Tom. You've both joined a couple of times before. How are you both doing? Claire, how are you?
I'm good, thank you. Nice to end the week on a sunshiny day instead of the rain that we've had for the last few.
Oh, absolutely. I think it's been like that across the whole of the UK, to be honest. It's been non-stop. It'll feel like summer one second, and then it feels like we're back in winter the next. It's non-stop. Tom, how are you?
I'm good. I'm not enjoying the weather so much right now. It's actually raining outside, and last week I got sunburnt, so I'm living all the weathers at once this week.
Unfortunately, though, it sounds like you got the worst end of all the weathers at once. It's not even like the good parts about it.
I'll take the sunburn. I had a nice day in the sun last week, so it's just the trade-off I get, unfortunately.
It's all worth it. So, talking a bit of fintech today, guys. Tom, what article have you brought to the table?
So today I'm going to be talking about Tovie AI, which has published its UK debt collection report, and it's highlighting the need for empathy in debt collection.
Fantastic. Sounds interesting. Claire, how about you?
I'm going to be talking about UK Finance's latest annual fraud report. So not such a positive story, but actually there are some positive stats to come with that. So not all doom and gloom.
Stuff to look forward to. And today I will be discussing how the UAE has gained a new access to credit service with Rackbank's new credit card. Although I think the conversation might delve into a little bit more talk around credit cards and, physical credit cards, stuff like that. But all that to look forward to. Claire, you've got me intrigued about the few positive points in this report. Why don't you go first?
Well, yeah, obviously it doesn't sound too great if you start with it. Their report shows that 1.2 billion has been stolen via financial fraud in 2022, which is either by authorised or unauthorised means, which averages around 2,300 every minute. So that's the kind of not so good news, but the positive stats are that actually it's figures that have fallen from the year before. So the 1.2 billion is actually an 8% reduction from the previous year. App scams, which are when people are tricked into sending money to people they think is a real person, is actually down 17%. So I guess while there are some positive findings, a lot of it's still quite high figures, really. And a lot of it actually emanates from not just kind of banks and financial institutions, but online platforms and telecommunications. So I don't know really. Last year's report, which we also covered, there was a call for better collaboration within cross sections of the industry. And the kind of message this year is the same. So it feels like, I don't know if next year they're saying the same. Sounds like not really doing what the report's suggesting. I guess regulators can introduce measures and banks can help improve the way they kind of educate customers. But do you think maybe social media platforms could be doing more to be a bit more proactive in finding ways to spot and eliminate crime actually before it happens rather than tackling it afterwards? What do you think, Francis?
I don't know, really. I think this article, it's like you said, it does feel very doom and gloom because even though the stats have gone down, I can't remember when I think it was a few weeks ago we were talking to Polly and she was like, yeah, this figure of 70% sounds like it's quite, you forget like the enormity of how big a percentage of, it's a majority. It's not even just a slight majority. It's a pretty convincing majority. And I think the same sort of thing applies here is when you look at how much money and sort of how much has really been lost to fraud, you see the number 485 million and you might think to yourself, well, yeah, it's down 17%. And I suppose in that regard, it's a good thing, but that's still an enormous number. And it's really, it's really sad and sort of shocking to see that the number is still that high, despite all the sort of technological advancement that we're seeing within the field. And furthermore, I mean, like fraudsters as well, they've successfully stolen over 1.2 billion in 2022. And again, it's a reduction, but it seems almost so minimal that I don't know. It feels very hard to sort of see the silver lining here. I don't know about you guys.
I think what, like you say, fraudsters come up with completely more and more sophisticated things each time. And yeah, it's still a hell of a lot of money that's been taken. And even really people that are so clued on are getting caught out by some of them because they are so realistic. And then you get the kind of ones every year, like even Martin Lewis, who's the money saving expert. The number of times he's kind of his personality is used in social media to do scams shows that no matter how much you can try and help everyone, there's always going to be that element of falling for something, which, like, I guess is what they're saying, that social media platforms should be doing more to before the fraud. You know, they should be spotting that there's these fraudulent adverts using personalities to try and pretend that there's some investment scheme. Like you say, it's hard to be cheerful about the fact the figures are falling when they're still really high.
I think as well, just quickly, sorry, Tom, to steal the thunder here for a second, but I think another interesting fact about it is that these are statistics from all year round, right? It's not just like a special event. Because I remember when the World Cup took place last year, I wrote an article on how the World Cup fever would cause a hike in cyber attacks. And I remember some of the things that they were talking about were these, fraudulent ways in which people were trying to take money, and it was really capitalizing on like this emotion that you see. But as you sort of mentioned, these are things that we're sort of seeing constantly, and it is, yeah, it's just difficult and again upsetting to see that there is such a big number still remaining in sort of successful fraud rates. Sorry, Tom, go on. What are your thoughts?
No, I was going to say it seems like it's quite an interesting time for the report to come out about fraud in the UK, because obviously last week there was the sort of UK announced its new fraud strategy, and I wrote an article about that sort of this time last week, and I sort of felt like the general feeling of people in the industry is that the measures are a good first step, but there's a lot more that needs to be done, and we need to not sort of revert to past mistakes again. So sort of in the past, there hasn't been enough collaboration with firms, and we're talking about social media maybe can do more, but I think there needs to be that sort of first step if the government's going to really try and tackle fraud and put the fight against fraud, as Rishi Sunak put it. It needs to be a lot more emphasis on collaboration, sort of, and I think the government needs to start those steps off. I think because there's never going to be social media sort of accounts aren't going to, or sort of platforms aren't going to sort of put a tackle in against them and put measures in unless there's a sort of commercial aspect to it for them, like a benefit for them. Because you think about if people are getting caught out on Twitter, if Twitter aren't facing scrutiny or regulatory pressure, then they're not going to make the first step out of the goodness of their own heart. So I think that's why it's an interesting time to see the report come out.
Just on that point there, Tom, sort of as you were saying, I think it is quite interesting as well when you sort of take into account the impact that social media can have. Because I think, like you said, you're never going to sort of see them take initiative themselves unless there is a benefit for them. Because I think, and it almost sounds bizarre, but I mean, traffic for a social media platform can never really be bad. Sure, it might be being misused, but the fact that they are getting this sort of traction must be a good thing for them. So I think there definitely needs to be a payoff, like you mentioned, and that I think you are sort of spot on that the government really needs to be the ones to sort of take some initiative and sort of lead the way to set a standard almost. I mean, we always talk about regulations and how there's got to be one defining thing to sort of set a precedent. I mean, I think that fits perfectly in this instance as well. So yeah, I think it's definitely a good space to keep an eye on. Any final thoughts, Claire?
No, I think it's just what everyone says. We've got to all work together. It's got to be everyone, and that includes us probably not doing silly things like thinking something is genuine when it's not. So
Again, this is the last thing though. I know I keep saying it'll be the end, and it keeps going on, but you hear about so many collaborations in the industry. It almost comes as a bit of a shock that and maybe this is just me being naive, but I would have thought that we'd see some more. I don't know, a bigger impact from these collaborations. I mean, at the FinTech Times, we're constantly hearing about the latest announcements and innovative technologies that are being launched to counter specifically this. And I don't know, it feels, I don't want to say I feel let down, but I kind of do feel a bit let down here. I feel like, I don't know, maybe the expectations were just too high.
And if next year's report comes back with the same kind of, we need to be more collaborative, then I think we should get our pitchforks and get down to 10 Downing Street.
I couldn't agree more. I couldn't agree more. But anyway, let's move on to our next topic. Tom, why don't you take the lead here?
Okay, so as I said, I'm going to be talking about Tovie AI's new UK debt collection report. And they've kind of released this report with an aim to try and drive empathetic, ethical AI solutions across the sort of debt recovery landscape. So essentially, it found that empathetic customer service results in better relationships and resolution of debt collection, as well as sort of improves brand reputation. Now, I think that's almost common sense. But it really dove into how AI especially can help companies use sort of advanced analytics, behavioral science, and machine learning to really automate a lot of debt collection, and how that could have a really positive impact on sort of both sides of the companies, looking to sort of recoup this debt from customers, but also for customers to help them really be able to pay their debt back and understand exactly the situations that they're in. So the report found that sort of more than 50% of the customer interaction process can be completed by an AI assistant that can handle a lot of the simple issues like identification and notification. And essentially, it explains that AI bots could help sort of agencies automate the entire collection process by creating custom call flows. And the bots basically allow debtors to free themselves from the guilt associated with talking about their debts, because they're not talking to a real human. And a bot can really emphasize and respond in a more convenient way, especially when you think about sort of AI voice mirroring and things like that. So I thought it was a really interesting sort of take on how AI can help this industry. And sort of on a more negative note, something I read in the report is about how the AI bot could replace an entire call center. So maybe there's the sort of bad side of AI in the sense of jobs and people keeping them. How much is AI going to really automate different areas in not only this industry but all industries, and how could it affect the job landscape in the future as well?
I think it's very interesting to sort of see how, the potential that AI has. I mean, I know we've spoken about it so many times on the podcast before, but I think we speak about it because there's reason for it to be spoken about. It's not just because it's like the hot topic. There is this huge potential with AI. And I think when you look at it from this sort of standpoint, like you mentioned, Tom, the way that most people like to deal with things, especially when you're getting in touch with a call center, is you want to be talking to another human, because most of the time when you're dealing with your finances, you want to be talking to someone who can be empathetic with you, who can understand the situation you're going through, and who can sort of provide sort of like almost like, oh, I hear what you're saying type of thing. And you're not really going to get that most of the time through a chatbot, which is why we always see people complaining about a lack of a human touch or something along those lines when they're dealing with customer support. And it's why we get all these reports coming in talking about, this customer or X amount of customers don't like it when their first interaction is with a robot, for example. And I think it is interesting to see that this might be an exception. When people are in debt, when people are owing money to others, there is guilt, associated with that. And I think unless there are some bad people who are purposely trying to scam the system or something, I think in this instance, the use of AI can be very, very, very useful because, like you said, it completely clears the conscience and it enables you to have sort of a more direct approach. There's none of this sort of small talk of sort of, let's think about the amount of times here at the FinTech Times that we've seen an article discuss X amount of people, or like over 50% of people feel awkward talking about their finances. Imagine having to do that when your finances aren't good. I mean, it's even more awkward then, right? And I feel like this completely clears that awkwardness, making for a better customer experience, which is ultimately the end goal for both consumers and organizations, right? So I think in that instance, it's great. And it's just, I think it will be interesting to, see in the future, like you said, is there ever going to be a time where we can truly say, we don't need humans anymore and that we can let an AI do everything? Because, I mean, I don't think that in any instance you can really do that. And I know that in the RegTech sphere, which is our focus this month at the FinTech Times, we literally heard from that point of view from Claire Huddleston, the marketing director at Clear Junction, in our latest RegTech article, where she explains that, no matter what you do with the regulations and sort of the automation of these compliances, or compliance technologies, I should say, you're never going to be able to completely replace the human touch. And truthfully, I think that's probably the same here.
I think you said the good point, though, that actually this is quite a good positive story. And often, at the moment, there is a real cost of living crisis. Lots of people are in debt. And when we talk about AI generally, when we talk about technologies, it is about kind of reducing costs and improving efficiency. Whereas this is actually what you said, Francis, tackling that human side. And it's great that AI is being designed in a way that respects kind of the human values as well. And debt is a really tricky thing to talk about and for people to discuss. So if a bots can allow people to not feel guilt when getting people are talking about their debts, and they can discuss better options without that kind of element of human worry and concern about how you're coming across to somebody in a vulnerable position, I think this could really benefit. I guess the only concern is that every single person's situation is different, and everyone might not be able to get their point across over if it's using automated software. And I guess that could be even more frustrating if you're in a really dire situation, but you don't feel you're getting the communication you want back. So on one side, I think it's great, but it's just that element of sometimes you just want to speak to a human.
I think just that topic, though, this idea that it might be a bad thing, can it also be a good thing, in the sense that your debt is as bad as my debt? It is all debt, and it is all going to get sort of resolved. Isn't that another way to look at it? Do you think that there isn't this sort of singling out of your situation is so dire? It's actually just everyone is being treated the same. I think if you look at it that way, potentially, I do see where you're coming from, and I do agree there is this element. This is why I say you can never really get rid of the human touch. But I think there is, at least in my point of view, I think if you're just sort of generalizing it all, it really takes the pressure off.
Yeah, I think it's that important to strike that balance between automation and empathy, especially in sensitive customer interactions. I think that's just the only caveat I would say. In general, I do think this is a great development.
Yeah, I think this is a kind of glass half full kind of situation, depending on the way you look at it. I think something that I think it's very easy to see the positives and negatives of this situation. And I think when you're looking at AI, can be used in such a positive way, and to be, used to be empathetic towards these situations. It's not something that you would typically associate AI with. But also, I think it's hard, at least for me, to read the article and the situation and not almost see it through the, one AI bot can replace the whole call center. And it's that idea of, it's good for sort of consumers and the company alike. But is the real driving force here actually cost saving? No company is going to come out and say the real reason we're doing this is to save money. But, that's potentially, one of the major benefits and the reason that the companies are bringing this kind of technology into the fold.
So we're saying this is all just marketing, really. They don't really care about the banks and saving their staff from having the guilt. It's just cost saving.
Potentially just cost saving.
It's genius. It's genius.
But it depends which side of the coin you're looking at,
Well, awesome. That was another great conversation. And I think we'll round out the day on our topics, focusing on credit cards and, this idea of do we still need physical cards? That's kind of the main thing that I wanted to discuss with you when bringing up my article today, which is on, as I said, the UAE has gained new access to a credit service with RAK Bank's credit card. So RAK Bank has rolled out a new digital onboarding solution that allows customers to apply for a RAK Bank credit card digitally. New customers will receive a virtual card instantly on completion of all checks, followed by the delivery of a physical card. So there are other aspects to the article which are quite interesting, but I can understand why some people might say this is just, your bog standard credit card launch. What makes it such an interesting article? And I think what makes it a worthwhile article to discuss is this idea of why is there a physical card being launched afterwards? Because I think in the modern day, I know that we've spoken about it before on the podcast, and that's when we pay for stuff, we tend to just use our phones now. We'll use our watches, our phones, or wearable tech. I can't remember the last time I used my card. I know, Claire, a few podcasts ago, we were talking about when you last used cash. But I mean, when was the last time you used your card? Was it recently? Am I making a fool of myself here?
I'm going to be this old person again that goes, yes, I use my card loads, Francis. I generally do, because sometimes when I've gone to pay with the phone, the signal, especially in my Sainsbury's, it just doesn't seem to ever open up or connect properly. So I often have to use the card. So sorry.
Well, no, don't apologize, because I think that will help with our discussion, because I'm the opposite. For the most part now, I don't even bring my wallet out when I go anywhere. I just have my phone, because I know that any payments that I'm going to need to make, if I'm traveling anywhere, if I'm doing anything, I can just pay with my phone. So I remember a conversation that we had with Dalbir Sahota, the Senior Director of Product Management at Nexus Risk Solutions, a few weeks ago, where we were discussing payments, the advancements of payments, I should say. And one of the things that we discussed was how more and more regions are now, adopting these digital first services and almost skipping out on the card phase, if you will, because they've gone from cash directly to these fully digital things, completely skipping cards. And although the topic of discussion was more in developing countries, I do think it is worth mentioning here, because, I mean, Claire, you've just given a fantastic example as to why people might still want to be using cards. But I mean, the questions that I had was, is it just a futile attempt to win to win over the older generations with a physical card? Does the physical card have a place in the modern financial world, or is it just a waste of time? And specifically when you're talking about credit cards, these checks can be done online. It says that everything is done online. And with this in mind, I think it would surely just be easier to give their consumers a digital card and, let people spend from there. In my head, it seemed like an unnecessary use of resources to be giving out a physical card on every single successful application, rather than perhaps saying, if you would like to apply for a physical card, tick this box. And yeah, no, I just thought it was an interesting sort of talking point of, do we still need physical cards? And I mean, Claire, do you have any other thoughts? Am I completely wrong, essentially? Am I completely wrong?
I have to say, when I read this article earlier, I did kind of think, isn't it the norm that you can apply for a card online? And is this, why is it taking the bank so long to offer this? But like you say, everywhere, just because you don't use a card, you have to forget that digital adoption and accessibility is completely different in different regions, in different age groups. And I still use a card. In fact, I'm sure I was at a show, I think it was Money Live, and there was a lady from Barclays talking, and she was saying that she was behind a woman in the till at the coffee shop who was kept trying to pay for her coffee with her Apple Pay, and she couldn't get it to work for ages. And she just said she just couldn't understand why she just didn't get out her card and pay. And I guess it's that shouldn't you always have both options? Why should one thing have to stop? Because I think I said it as well previously. I've been on the train before where it's like the systems are down, it's cash only. And there's always, well, I don't have any cash. What do I do now? Perhaps, you've just got to make sure that everyone has the option to be able to pay with any kind of means, cash, card, phone, wearable tech.
So I wasn't going at it from a completely selfish standpoint. I wasn't trying to say, I don't use cards, therefore no one should use cards. That wasn't what I was going for. I was basing it more off of some of the findings that we've been sent, which are sort of moving towards this, completely digital payments world, I suppose. So it wasn't completely me just talking from my own experience. There was a little bit of reasoning behind it. Tom, whose side are you on here? Mine or Claire's?
You know me. I like to sit on the fence. I don't like to take sides.
Oh,
But
here we go.
at this point, Francis, you're wrong again. I'm sorry, but I think it's just the standpoint of financial inclusion is you can never we are moving towards digital payments, and however many percent is so much more. It's sort of taken prevalence now. Everything's sort of digital. We're moving towards digital payments for everything, really, especially in the UK. But there are never times, or there's always the occasional moment where that doesn't work. Like Claire said, some regions, the signal's poor, you can't pay with your phone or whatever. We're talking about cards here, but it's sort of a similar argument for access to cash. Is there's always moments, if 99% of your payments are digital, you still need cash for the 1%. And different people with different sort of circumstances will have different needs. I was at one of the events in London, I think it was Pay 360, and one of the panels was talking about financial inclusion and specifically access to cash, and talking about how it's very easy to forget, that people do need cash, and some people will not be able to live without it. And the sort of lessening number of ATMs across the country, and this move away from cash is actually affecting a lot of people, especially in rural areas. But also people with like dementia. Cash is an easy way for them to manage their money. So it's of course there's always, we're always going to be moving towards digital payments, and I think there's always going to be a move toward, away from cash. But I think at least for the sort of short to mid term, there is no way that you can just completely remove cash and card from the equation until we've got systems in place absolutely everywhere to ensure that everyone's included, and that financial inclusion is sort of put first and foremost in sort of all regions of the country.
I mean, I would definitely agree with that. And I remember especially after the pandemic, or maybe it was even during the pandemic, but I think it was sort of in the wake of it, at least maybe lockdown 2. And we were sort of hearing about all the impacts that, these cashless, what would be the word, sort of these initiatives that were taking place. And you would hear about, small local bakeries or small businesses in more rural areas, like you said, Tom, that were being completely impacted by this, and maybe even had to shut down their businesses as a result of it. So I think when we're talking about from like a financial inclusion standpoint, I'm not trying to say that cards should be completely wiped out, and I don't think that is the answer by any means. I think there should always be an option to do it, to be able to pay with card. I just thought it was an interesting sort of viewpoint to perhaps suggest that, is it always going to be the best use of resources now as we do continue to develop these digital standards? And I think one of the biggest points is that like we heard from Dalbir a few weeks ago, was this idea that of course some regions this isn't the case, but for some regions they've completely skipped the card generation. So that's why I thought it'd be an interesting topic to sort of just discuss in from sort of perhaps like a further what's the word here, perhaps like a bird's eye view of it. Are cards, really the best use of a company's resources to be providing? Or now that there are these digital alternatives, can we go down that route instead? But I do completely agree with you, Tom. If we're talking about it from a financial inclusion standpoint, and especially talking about cash, weirdly for me, I don't know if you guys would agree, I think it would be more beneficial to sort of have cash than it would to have cards. So if you're talking, you have your digital payments method, whatever that might be, that isn't card, and then cash rather than cash and card. I don't know. I feel like that's the way that I look at it now, is that if we're talking for an alternative, you want cash.
You were going to give earlier the example, Tom, of us in Hong Kong, where we went to the supermarket and my card, I don't know what went on because we couldn't understand at all, but my card didn't work for age, or they were doing something, and we didn't have any cash either. So it was a bit like, well, what happens then? So I don't know. I'd say cash. Well, eventually, somehow they said my card went through. Don't really know. But in that instant, yes, I'd say cash was better to have.
See, yeah, that's what I think. I just think when you sort of bring it back to its roots, I think cash is probably weirdly more applicable and more important. I don't know. It's weird that we talk about a cashless economy and then not perhaps a cardless one. There we go. Start the conversation, a cardless economy.
An important point maybe at the moment especially is, can you have how are you going to access your cash without the card? You can't go to an ATM and, well, at least most of the ATMs around me, I can't just go and tap my phone on the ATM. I need the card to get access to cash.
A very good
point. So right now you can't have one without the other.
Did not think about it that way, but yeah, no, you are spot on. Well, there you go. So there's some food for thought at least. Perhaps my ideas of the resource being spent on card, maybe they're not quite as well placed as I'd originally thought. But for all these topics that we discussed and more, please do check out the fintechtimes.com for all the information and all the articles. And yeah, now the same way that we always do it on the News and Views podcast, it'd be great to sort of round out the week and our views really, and with a little bit of knowledge and a little bit of insight on what we've learned this week. So Tom, why don't you go first? What have you learned this week?
So this week I learned that an insurance company, Wellex, which is based in the UAE, has launched a 24/7 mental health support and counselling service that's going to be incorporated into its customers' existing insurance plans that it already offers at no extra cost, in a move to sort of break down the barriers to accessing sort of mental health support, especially in a region where the awareness surrounding the issue is really limited.
Personally, I'm always loving it when we hear about things that are supporting mental health. So yeah, this is definitely something good to hear. Claire, what about you? What did you learn this week?
Well, on the same of what we were just chatting about, I've been learning more about wearable tech this week with our Behind the Idea that was with DigiSec, which is well worth the read. Just another way of saying that there's more than just a payment device. How many different things you can pay with now is very interesting.
Awesome. And, just saying, wearable tech, you don't need a card if you got wearable tech. I'm going to finish out with what I learned this week, and that is that Banking Circle has joined the UK FPS, the faster payment service, as a direct participant for for GBP. The move adds significant value for clients and underlying customers, being closer to clearing as a direct participant on FPS sees Banking Circle offer faster settlement times, and the bank also now has the ability to handle significant payment volume. So yeah, Claire, Tom, thank you very much for joining me this week on the Fintech or on the News and Views podcast. God, it feels weird to take this role from Polly.
Yeah, I think Polly will be back next week, hopefully. Just kidding.
It's been enjoyable and it's been a very interesting conversation. So yeah, look forward to seeing you guys next week.
Thank you for having me.
Goodbye.
Thanks for listening to the Fintech Times News and Views podcast, brought to you by LexisNexis Risk Solutions. Don't miss next week's episode and continue the conversation using #TFT News and Views and follow us at the Fintech Times.